Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be breaking down the latest action in the markets for all you long-term investors out there. We've got a packed day with plenty of movers, shakers, and big-picture trends to chew on. Whether you're in for the long haul or keeping an eye on short-term swings, let's dive into what's shaping the financial landscape today and how it fits into your wealth-building strategy. First up, let's talk indexes because they set the tone for the day. The major U.S. markets showed some solid resilience to start February. The S&P 500 climbed a nice 0.54%, closing at a strong level, while the Dow Jones powered ahead with a 1.05% gain. The Nasdaq wasn't far behind, up 0.56%, and the Russell 2000 also joined the party with a 1.02% increase. What's interesting here is the VIX, often called the fear gauge, dropped over 6%, signaling a bit of calm after recent volatility. For long-term players, this kind of broad-based strength suggests the market's still got legs, even if we're testing record highs. But keep an eye on momentum. History shows February can be a bit choppy. Now let's zoom into the winners of the day among large caps. Tech and industrials stole the spotlight here. Micron Technology surged over 5%, riding the wave of tight supply in high-bandwidth memory and rising DRAM prices, key components for AI and data centers. Caterpillar also roared ahead with a 5% gain, showing strength in industrial demand. Intel wasn't far behind, up nearly 5%, and Western Digital jumped almost 8%. These moves highlight a continued appetite for tech and infrastructure plays, which could be a signal for long-term portfolios to lean into sectors benefiting from digital transformation and economic recovery. On the flip side, not everyone had a great day. Among the large-cap losers, Disney took a hit, dropping over 7% despite strong quarterly earnings. Investors seem spooked by CEO succession uncertainty rather than fundamentals, a reminder to focus on the bigger picture with blue chips like this. Robinhood markets also slid nearly 10%, reflecting volatility in fintech amid broader market swings. Coinbase and MicroStrategy felt the crypto chill, down over 3% and 6% respectively, as digital assets faced a rough patch. For long-term investors, these dips could be entry points if you believe in the underlying stories, but short-term turbulence is definitely something to watch. Looking at the market movers by volume, it's no surprise Nvidia and Apple dominated trading activity. Nvidia saw a slight dip of almost 3%, but it's still a heavyweight in AI and tech, while Apple gained over 4% after smashing earnings expectations with a record quarter driven by iPhone sales. Tesla was also in the mix, down about 2%, reflecting mixed signals from global EV demand. Palantir and Intel rounded out the active list, showing the market's obsession with tech and data-driven stories. These names are core to many long-term growth strategies, so their daily moves can offer clues on sector health. Shifting gears to broader economic news, there's a lot to unpack. A partial government shutdown delayed the January jobs report, leaving us in the dark on labor market health for now. Investors are itching for that data, as it's a key indicator of economic strength. Meanwhile, the Fed's in the spotlight with Kevin Warsh nominated as the next chair. Opinions are split. Some see him as a stabilizing force. Others worry about political influence on monetary policy. For long-term folks, this uncertainty around Fed leadership could mean volatility in interest rate expectations, so keep your risk tolerance in check. Crypto markets also made headlines with a massive $2.5 billion in Bitcoin liquidations as volatility spiked. This sell-off, tied to broader risk asset weakness, reminds us that digital currencies are still a wild card. While short-term pain is evident, some analysts like Fundstrat's Tom Lee think crypto could be bottoming out. For long-term investors, this space remains speculative. Tread carefully unless it's a small slice of your diversified portfolio. Let's talk earnings, because it's a busy week ahead. Heavyweights like Apple, Intel, and ExxonMobil are on deck or just reported, and the market's watching closely. Apple already crushed it with a record quarter, especially on iPhone demand, reinforcing its place in long-term growth portfolios. Intel's results are key for gauging semiconductor demand, while Exxon's numbers could signal where energy prices are headed. Starbucks, MasterCard, and Chevron are also in the mix, each offering insights into consumer spending, financial services, and oil trends. These reports can sway sectors short-term, but for us long-term thinkers, they're data points to validate or adjust our core holdings.
Exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Peeking at the past week's top large-cap gainers, Seagate Technology led with an 18% jump, followed by SanDisk at over 14%. Royal Caribbean also cruised higher by 14%, and Verizon and AT&T gained over 11% each, showing telecom strength. These weekly movers underscore where momentum is building. Tech and consumer discretionary could be areas to watch for long-term trends if fundamentals hold. Conversely, the week's biggest losers included Axon Enterprise, down over 20%, and United Health Group, off 19%. United Rentals and Carvana also took hits of 17% and 16%. These sharp declines often reflect sector-specific fears or broader rotations. Healthcare and industrials are feeling the heat. For long-term investors, these could be contrarian opportunities if you've got conviction in their recovery. Sector performance over the past week tells an interesting story. Industrials and consumer defensive held up best, with minimal losses or slight gains, showing some defensive resilience. Communication services, on the other hand, popped over 4%, likely driven by big names reporting strong results. These sector shifts are worth noting for portfolio balance. Long-term, you might want exposure to steady performers like these during uncertain times. On the weaker side, basic materials cratered 6%, with metals like gold and silver taking a beating. Technology and healthcare also lagged, down over 2% and 1% respectively. These sectors are feeling macro pressures, commodity sell-offs, and profit-taking in tech. For the long game, dips in tech might be buyable if you believe in innovation cycles, but materials could stay choppy with global demand in flux. Wrapping up with a broader lens on the S&P 500, we're seeing it flirt with new highs before a slight retreat today. Some analysts are cautious, pointing to elevated valuations, while others are betting on AI-driven productivity to keep the rally alive. As long-term investors, remember that market cycles are part of the journey. Staying diversified and focused on quality companies is key, even if we hit a rough patch. And a quick note on the Nasdaq, it's been tech-heavy as always, with mixed signals from leaders like NVIDIA. The index's strength ties into the AI narrative, but CapEx concerns in the space are real. For your long-term strategy, tech remains a growth engine. Just be mindful of overconcentration.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.